Hey guys, welcome back to the channel. I hope everyone is doing well. So today I want to start like doing like the Defiance summaries, similar to like the yield max summaries for like the end of the week. So this one is for February 20, the week ending February 23rd. So I hope everyone enjoys this. And I wanted to also do this slightly different from how like our friends over at Retire and Dividends and Max Convexity, the way they do their summaries. So I think this might be like a good way to kind of supplement like the information that's already out there. I don't know how they manage to do this on like a daily and sometimes like multiple dailies. I mean, God bless them. So this way, I think maybe for people that just want to see maybe like things in a different way, I think this might be beneficial to some folks in the high yield community. So let's see how this goes. So for the Defiance, similar to how I break down things by like the cash, the option, and treasury positions, the way I wanted to see this for myself is just because I want to see how like the money is kind of like flowing between like the different buckets. So ideally they'll be making some money on like the options and then convert that to cash and then take that cash and convert part of it to treasuries so that they can have like a bigger collateral base so from which they can sell like more options. And this is good in that like liquidity begets liquidity, because then if they're successfully managing like their option positions, that will help attract like more cash, and then that could lead to like a bigger treasury position. And then the cycle continues, then they can sell more options. So ideally they want to create like a kind of like a virtuous cycle. Now unfortunately in real life it doesn't always happen that way. Like things happen in the market, and like let's say for example, like let's take a look at IWMY between like the 21st and the 22nd. You see like a big move down in terms of like the treasury positions. And you also see like the same thing happen with like the cash position as well. So I take it there was like a loss between those dates, but then you see like kind of like a gradual like recovery in terms of like the treasury. But then like you see like the cash position, like it goes down like drastically. But then you see it like head back up like for like the 24th, which is really the 23rd, but you guys get my point. So for like starting for like the new week, so they have like enough cash, I guess, to meet like potential withdrawals and whatnot. And you see like the treasury position kind of like stay the same, so that's good. And then that gives them like a new base to kind of like sell like cash secured puts for like the for the new for the new day. And you kind of see this, like each of them also have like the different personality. You'll notice like for JEPY, like it's kind of like I would say it's kind of like flattish, which is kind of a good thing for people that want more, I guess, like more, kind of like more stability. Unfortunately, the options, like if you look at like the trend like over like the different days, like it's not like that exciting, but that's actually good for some people that don't want that much volatility. And you'll notice the same thing for like the treasury positions. It's not like these drastic like up and down movements. And also similar for like the triple QY, they're kind of like all over the place too in terms of like cash. Although I would say like they kind of like steady out like for the end of the week going into like the new week as well. So like you see like the options, like you see like this nice juicy one on like February 21st, and they kind of like sag down a little bit. And then also for the treasuries, like their treasuries is pretty interesting too in that like hasn't seen like these drastic like up and down movements. You see like a small decrease between the 21st and 22nd, but it's not too bad. And then they kind of recovered like for like the like heading into like a new week. And then like our new friend, the treasury based product, it's also like it's this one's kind of wacky because like I wasn't expecting like this much cash to come in for like let's say like around the 17th to the 21st. And then I guess like between like the 22nd and 23rd, I guess like they took that extra cash, and looks like they did redeploy it into like the treasuries. And then you see like the option positions are pretty interesting because like you would expect this to also, well, I guess like two things. Like first, it's not on like a daily cycle, so this will probably be more kind of like on the yield max products where you can potentially see like negatives and then positives. So like for example, you see like on the 23rd, the weekend in 23rd, that's actually a good thing. You want to see like a positive movement. Whereas like the other ones, like the triple QY, etc., you want to see like ideally negatives every day, and then hopefully they'll be able to kind of monetize all this stuff and turn it into cash and then turn that into treasuries. Over here, it's interesting because well, technically everything here is like treasuries. So, but it's the same concept. You want this to eventually gradually move into like a positive position. So as you can see from like the treasury products between the 23rd, well, which is like technically the 22nd to the 23rd, like heading into the new week. This is actually a good thing. You want to see like like this option position grow in terms in terms of movement, and then hopefully like in the coming weeks when things like roll off, like the option position rolls off, you want to see like this cash position like increase, similar to how, although there might be like a, I guess like a delay in terms of like how the cash position like moves up and down. But anyway, it's interesting to see like they all of these guys have like their own like different like personalities. So I hope this is helpful. So let's go back into the PowerPoint. I would like to continue this on like a weekly basis as well. Uh, this way, like it kind of saves me like some issues on like my voice and like health, and then also at the same time, like it also helps you guys like supplement your information gathering. So I think this could be an interesting video idea going forward. And then, but then like just in case, you should always have like different income-based investments, like whether it's treasuries, dividend aristocrats, etc. And of course, like the risks are they're not likely to have good capital appreciation, except for maybe the treasury product. The yields may not be, well, they're definitely not consistent week to week. And of course, it doesn't guarantee profits. If you like this type of content, please consider giving this a like, and any and all subscriptions are welcome. I would like to keep this channel like free and alive as long as I can. If you can help old Panda beat the algorithm, I would greatly appreciate it. Thank you so much for watching. I appreciate your viewership, and I'll see you in the next one. Bye now.